Hello, everyone, and thank you for joining us today. My name is Danielle Burns, and I am the Managing Director of Growth at Adasina Social Capital. I will be serving as your moderator for today's conversation. We are here to explore an approach to municipal bond investing that is grounded in racial justice, one that seeks to repair past harm, support community infrastructure, and direct resources in alignment with values of equity and care. At the center of this conversation is Adasina's Fiscal Justice Municipal Bond Strategy, a continuation of work we began several years ago. This strategy focuses specifically and exclusively on Black communities, communities that have historically been excluded from full access to capital due to redlining and other forms of systemic racism. These patterns of disinvestment have tangible consequences on water systems, schools, housing, and other infrastructure. This is weakening the very infrastructure that supports life and opportunity. Through our partnership with Clarion Capital, we are examining how municipal bonds can be used not just as financial tools, but as a lever for community stability, resilience, and justice. Today, we'll explore how this strategy is structured, what it aims to accomplish, and why it matters, not just for investors, but for everyone who is committed to creating a more equitable economy. I am honored to introduce our speakers today, each of whom brings deep expertise and, just as important, a deep personal commitment to this work. Together, they'll walk us through the origins, impact, and continued evolution of this strategy, and we will leave time at the end for your questions. Maya Philipson is our co-founder and chief operating officer and chief compliance officer here at Adasina Social Capital, where she leads business strategy, ensures a values-aligned client experience, and mentors our team members in support of our firm's mission. She brings deep expertise in financial services, organizational development, and movement alignment. Eric Glass is the founder of Clarion Capital and co-founder of the Investor Circle Toward Decarceration. Eric is a seasoned impact and activist investor who leads fixed income municipal bond strategies that address disparities in the built environment and reverse generations of disinvestment. His career includes leadership at AllianceBernstein, where he developed and led the municipal impact investment strategy, as well as early work managing a transitional homeless shelter, which is a through line of care and systems level change that defines his work today. And our first speaker up will be Rachel Robasciotti, who is our founder and co-CEO here at Adasina Social Capital. Her passion for social justice is deeply rooted in her lived experience as a Black queer woman raised in a community that struggled for safety and financial security. She is a recognized leader in integrating racial, gender, economic, and climate justice into investment portfolios. Her work has been featured widely in the media and in prominent industry events, including a recent Wall Street Journal interview on the impact of the Trump administration on DEI, ESG, and impact investing. Rachel coined the phrase social justice investing in 2018 and is regarded as the driving force behind its widespread adoption. With that, I'll turn it over to Rachel to get us started. Thank you.
Hello, everyone. I'm glad to be here, and I'm delighted to see you all in the room. What I'd like to do is just give you a brief introduction to Adasina to kind of set the stage for who we are and what we do. We are an impact investment firm. Specifically, we do asset management work with more than 300 million in assets. And we believe at Adasina that investing with social justice values can deliver both competitive financial performance and meaningful social progress. And our approach has historically evaluated publicly traded companies and only invested in those that align with our core social justice principles, which are racial, gender, economic, and climate justice. We've more recently expanded it into another aspect of the public markets, which is municipal bonds, where we see the ability to advance social justice and enact our theory of change. What really sets us apart is our data partnership model with social justice organizations. So we partner with them to provide the data, often that we use in our evaluation process, and ensure that our portfolios reflect real world needs rather than just solely relying on, for example, in public equities, corporate self reporting, or in this case, simply government reporting. And the other thing that sets us apart is that we take what we learn and we build a bridge. We leverage the capital to make large scale positive impacts on the world. We're not just investing the capital, we're leveraging it through coordinated investor activism and advocacy that support social justice. And to date, we've mobilized over $1 trillion in assets across the investment industry. I want to just speak to our theory of change to help connect the dots between the theory of change and this municipal bond strategy, which has its roots in that, as Danielle mentioned, that fiscal justice strategy that we started several years ago. And this represents kind of an expansion of that. So more specifically, when looking at our theory of change, we believe that we should lead investors to leverage our collective power as investors in public markets to advance those movements for racial, gender, economic, and climate justice. And we do that in 3 ways. We want to partner with social justice movements, as I spoke about previously, specifically to identify the impactful metrics. Like, what should investors be focusing on? How can we listen to those we intend to impact rather than simply taking up our own ideas of what positive impact might mean? We want to prove social justice metrics are investable by being the first asset manager to invest. It's really important in our industry to go first. And the last feature here is to then mobilize investors to collaborate in solidarity with social justice movements to have large-scale systemic impacts. And you're going to see aspects of this theory of change show up as we introduce you more fully to the municipal bond strategy that has with its deep focus on racial justice. And I'd like to invite Maya Philipson, my co-founder, also to unmute and help walk us through kind of our thinking process when this was being developed.
Thank you, Rachel. So our theory of change allows us to see inequalities in public markets that might not be at the forefront of where other investors are looking. One of the places that we saw that inequality, particularly on a racial justice perspective, was in the municipal market. And so we started a project to see, using our theory of change, if we could find metrics and make them investable and be one of the first movers in a market to actually to try to make that inequality and worked on and make those metrics investable. We forged a partnership with Clarion Capital to address this injustice. Adasina has expertise in public markets and a strong racial justice lens, and Clarion has expertise in municipal markets. When I'm talking about some of those injustices that we've seen, some of the metrics here that you can see talk about the inequalities within the municipal market. It might be helpful to understand sort of what is the municipal market and what are municipal bonds. You can think of municipal bonds, they're debt securities issued by state and local governments. They usually are used to fund public works, parks, roads, libraries, other infrastructure. They can really be thought of as loans that investors make to local governments. That is really important, particularly the local governments, because municipal bonds are incredibly place-based. Watch out for that, that's going to come back later. Most people think of municipal bonds as sort of the original, most basic impact investing. Because of their place-based nature, they can be directed at specific communities and specific issues. One of the fun things about them is if you happen to live or work in one of the municipalities where you actually own a municipal bond, you can look out your window and see that you helped fix a road or build a teaching hospital. Some of the clean water that you might drink is because of a bond for a water system in your community. So if municipal bonds have this amazing ability to be original place-based impact investing that actually impacts specific communities, what are the communities that are important to us at Adasina and Clarion Call? So what is important to us is focusing our support for racial and economic justice. The strategy, as Danielle and Rachel talked about, focuses exclusively on predominantly Black municipalities and cities with very large Black populations. We want to advance racial and economic justice, specifically in those communities. And by investing in the municipal bonds of Black communities, we provide investments in basic human rights. Some of those municipal things that I spoke about earlier: health, affordable housing, education, clean water. With investing in this strategy, we can be completely place-based and issues aligned and actually target those funds directly to Black communities. And so we're able to have a social impact at scale, focused on the communities that are important to us. To do this strategy, we focused, as I mentioned, with a Clarion Call Capital. Clarion Call Capital will be the advisor for the strategy. Adasina will be the sub-advisor. And with that, I want to introduce my colleague and co-conspirator in this work, Eric Glass, who I have been lucky enough to work with for several years now, and is going to focus and tell us about his firm, Clarion Call Capital, and some of the really important parts about this strategy that invests in these Black communities.
Thank you very much, Maya. I really appreciate it. And to be honest with you, I just want to take a moment just to thank you, to thank Rachel, to thank Danielle, to thank Aspen and everybody at Adasina for just being a really great collaborator and partner in the work, as well as providing a platform to talk about the work. So much appreciated. So as far as Clarion Call Capital is concerned, we are solely a fixed income impact investing platform. Most investors still think about alternatives, in terms of private markets, when it comes to impact investing, and public fixed income has been largely ignored. At least I should say rigorous and thoughtful fixed income impact investing has been ignored, as evidenced by a recently published paper from Tideline, Bluemark, and Builder's Vision entitled "Scaling Solutions: the Fixed Income Opportunity Hiding in Plain Sight." So it's great to know that the other parts of the capital markets are now starting to realize the importance of fixed income. But just I've been doing impact investing in public fixed income, municipal fixed income for a decade, focusing exclusively on reducing disparity in the built environment between those that have and those that don't. Clarion Call Capital was basically forged out of this concept of urgency of now. Our social fabric continues to fray, physical infrastructure is crumbling, and resilience is being ignored, especially in communities of color. Also forged out of a desire to be free of performative asset management proclamations, to be honest, to use community investor activism to expedite social and environmental change, to make bold statements, and to push back against the status quo. We have been and continue to be engaged in various investor campaigns to bring about positive change in communities. For example, in work that we do with Adasina Social Capital, we look to stop the construction of prisons and jails throughout the country. We are at the forefront of trying to replace the 9 million identified lead service lines across the country. And we have taken several stands around ensuring the protection of children from physical and sexual abuse in youth-serving organizations. When we talk about our Clarion Call's, broad guiding principles, think about education. How many school districts in the country have where the average life of a school is anywhere between 70 and 100 years old? And it's not because they're architectural marvels. It's not because they're historical landmarks. It's because they're old. What does that say to kids that go to school there? What does it say, to teachers that have to teach there? Effectively, it sort of says you're disposable. And as a human and as an impact investor, that to me is abhorrent. And so how do we think about equity, not in the form of ownership, but equity in terms of the form of state-of-the-art facilities? Because there's an existing and growing body of literature that suggests that outcomes and achievements for kids are better in state-of-the-art new facilities. Think about another sector, healthcare. how many places around the country exist where there are communities literally 3 or 4 miles apart, where life expectancy can be anywhere between life expectancy differential or death gap can be anywhere between 20 and 30 years, right? That should be abhorrent to us all. And how do we sort of think about fixing, how do we think about fixing that? And that's one, investing in safety net hospitals, federally qualified health centers across the country that are not only providing high quality care within the confines of the 4 walls, but are actually uber focused on the social determinants of health. As Maya had said earlier, we view affordable housing, access to clean water, healthcare, affordable mobility, like mass transportation, clean energy, and quality education as human rights and available to all. We sort of reflect that in the investments that we make by only investing in affordable housing in which family income does not exceed 80% of the area median income. We only invest in K through 12 education where at least 60% of the school enrollment, of the district enrollment qualifies for free reduced price meals. We invest only in higher education, colleges and universities that have at least 40% of their full-time, first-time students receiving Pell Grants. We invest only in healthcare systems that have at least 20% of the gross payer mix coming from Medicaid. And this is merely an initial screen, by the way, to ensure that we are targeting under-resourced and excluded communities, separating the wheat from the chaff, if you will, in terms of our target markets. As far as in terms of being a traditional asset manager, we employ traditional asset management and credit analytics skill sets to each and every portfolio we manage. Over the course of my professional career, I've had distinct careers in credit analytics, trading, and portfolio management. From a purely technical perspective, like any other fixed income portfolio manager, we have targets around duration, credit quality, sector, state exposure, and try to take advantage of tax loss harvesting. There still remains an assumption that because we are doing impact investing, there must be concessionary returns. That is not true. Our opportunity set of investments are in public markets, and we believe that using fundamental credit and market research, along with incorporating environmental, social, and governance frameworks, will help us better identify value and also mitigate risk. We seek out market and better than market results. We do all research in-house and engage directly with and this is an important point, engage directly with issuers to understand the purpose behind the financing and how proceeds are going to use to uplift community and contribute to health and well-being. Engagement is essential to our work. Generally, without that engagement, we will not invest. We use key performance indicators that are idiosyncratic, if you will, or specific to the sector that we're investing in, and track those over time to gauge progress. We assign impact scores to everything that we invest in and use that information to guide portfolio exposure and positioning. We want to be the investor of first resort to help poor communities access the lowest cost of capital that is available to them. When we turn to racial justice and risk indicators, racial injustice has resulted in socially, financially, and environmentally vulnerable communities. That foundation of adjustment, as all of us know, was laid as a result of slavery, but during and following Reconstruction was grossly exacerbated by both federal and state legislation that included redlining, which trapped Black communities where sewer and water lines stopped and where factories of industrial production and accompanying pollutants became neighbors. All means of social control, undermining opportunities to thrive, and undermining the well-being of Black communities. There's no dearth of examples. We can think about the GI Bill in terms of providing access to white soldiers coming home from World War II. We can think about the Federal Housing Administration creating the 30-year mortgage that was only available to white communities, and racial covenants that prohibited the sale of homes to anyone that wasn't considered quote-unquote Caucasian. Pilfering property taxes and other local taxes from Black communities to pay for and finance schools in white communities. Unionization, which focused on which explicitly excluded domestic workers and agricultural workers, which were predominantly people of color. And please don't forget the literal looting by white businessmen of the Freedmen Savings and Trust Company during Reconstruction. The African American community continues to be exploited and extracted from. Today, it takes the form of corporate tax abatements, excessive fines and fees, and police brutality settlements. It is our hope and intent that our investment and direct engagement with municipalities we invest in can lead to meaningful opportunities for change. Our investment in physical infrastructure, whether it be schools, hospitals, clean water, affordable housing, will enhance a community's economic and psychological well-being and catalyze growth and prosperity. A growing tax base and higher government revenues will be invested back into the community as part of a virtuous, self-perpetuating cycle of benefits that are socially, racially, and environmentally just. It's far past time to actively create a movement to push back against 400 years of oppression through the very mechanism that intentionally funded that oppression, finance and financial markets. Thus, the investment strategy. In partnership with Adasina, the racial justice strategy upholds all guiding principles that we discussed earlier, explicit investments in under-resourced, excluded communities, but focuses exclusively on physical infrastructure in African-American communities. We specifically define an African-American community as initially eligible for inclusion in our strategy if the Black population is no less than 21%. 21% seems like a random number. However, it's not. It's actually 150% of the national Black population of 13.7%. Or a community's Black population is equal to 150% of the state's Black population. The racial justice strategy being currently managed has slightly over $50 million of municipal bond investments. I also wanted to take a time since we are talking about the strategy, just think about what are some examples some effective examples of what we mean by impact investing and transformational change. And so what comes to mind is our recent investment in Chicago, as in the city of Chicago issued some general obligation bonds about 3 weeks ago. The use of proceeds of a small tranche, a small section of that financing was to finance the replacement of lead service lines. Chicago has 400,000 lead service lines, all disproportionately, I shouldn't say all, but disproportionately located on the west and south sides of the city, which are in communities of color. For those of you who don't know, lead is a horrific neurotoxin that stunts cognitive development in children and harms women of childbearing age. There is no safe levels of lead. Chicago faces an incredibly daunting task. And it's basically sort of going to do this work over the next 20 years. We were a part of an initial down payment, part of an initial down payment that is absolutely transformational to Chicago and to communities on the west and south sides. We can talk about economic development. We can talk about health and well-being. It is impossible to do without safe and clean drinking water. We recently made an investment in Spelman College, all women's historically Black college and university in Atlanta, Georgia. HBCUs have been underfunded by approximately $13 billion over the last 30 years. Sort of an astonishing statistic. Another astonishing statistic is the fact that average HBCU endowment is $255 million. And so there are 107 historically Black colleges and universities. That's a total endowment of about $28.4 billion. To remind people, Harvard has a $53 billion endowment. And so as far as I'm concerned, there is no greater impact investment than investing in education, and specifically in higher education in historically Black colleges and universities. And then finally, sort of a beacon of light or in the healthcare space is Boston Medical Center. Over 40% of the gross payer mix at BMC comes from Medicaid. This is a safety net hospital for the city that is globally known as the leader in addressing the social determinants of health. They have understood for a very, very long time that in order for our community, health has far more to do with our zip code, where we live, work, pray and play, than it does our genetics. And so Boston Medical Center has been at the forefront of housing, forefront of affordable mobility, the forefront of nutrition, the forefront of education for their community as a real anchor, and looking to raise the quality of life in their community, because there's a high correlation between a quality of life and life expectancy. And so just an absolute amazing group of people doing some very hard work. So kudos to all those folks. Adasina and Clarion Call Capital do this work. We will continue to do this work because it's our reason for being. It's our raison d'etre. I'm going to date myself here and remark about the OJs, a Philadelphia-based soul group from the 70s. And a famous one of their greatest hits was the Love Train. And to be perfectly honest with you, this is a very big train, and there are a lot of seats on it, and there are a lot of seats that are still available. And we'd love for you all to join us in this journey. And so with that, I will turn it back to Danielle.
Thank you, Eric. I'm thinking, I know that song too. So am I going to date myself by saying I know the Love Train song? Oh gosh. Thank you all for such a powerful and thoughtful discussion. Before we shift into Q&A, I want to briefly just come back to, why we are here together. So at its core, this conversation is about how we realign capital with care. How do we do that using municipal bonds, not just as a technical tool, but as a pathway for racial and economic justice in communities that have historically been left out of investment? So with that grounding in mind, we're going to open up the conversation a bit further. We want to hear from you and take some questions. Feel free to drop your question in the chat. We may not be able to get through every question during this session, but we will absolutely follow up with you afterward. So looks like we have a question here for Eric. Eric, what are some inequities you are seeing in municipal infrastructure around the country today?
Well, unfortunately, Danielle, the inequities are everywhere all at once, right? Infrastructure is in poor condition, a reflection of deferred maintenance, which are economic decisions given financial scarcity. Water leaks, deteriorating schools, proximity to polluting industry, shuttered and/or limited healthcare access, inaccessible public transportation. These things don't exist in wealthy white communities. They are commonplace in Black and communities of color, and that's what we seek to address.
Thank you, Eric. Looks like we have a question here for Rachel. Rachel, what impact do you see this strategy having on racial justice conversations going forward?
This is a moment where I see fewer racial justice conversations being had. It was so popular in 2020 after the murder of George Floyd for us, thankfully, even in finance, to be talking about racial justice. And there are simply fewer of these conversations because diversity, equity, and inclusion is suffering a popularity crisis, which doesn't mean that it's a bad idea. It just means that it's currently facing headwinds politically, and it's become a very politically polarizing topic. This is the work that Adasina has always done, is committed to continuing to do. And so I believe at this moment in history, the fact that we are being very public about offering to the world a racial justice investment strategy is in and of itself kind of a defining thing to be offering, given that there's been so much of a hush around DEI and ESG investing. So I really see this as having a bolstering effect, and it's going to be really important that we continue to see assets flow into the strategy. We've had a lot of early success with the original strategy, and as we open this up wider, it's going to be important that the money follows what we know to be the interest. We've been getting a lot of positive feedback and inflows in our other products, and we're opening this product up and hoping to see the same.
Great. Thanks. Thanks, Rachel. Looks like we have a question here from Maya. Maya, tell us a bit more about the ongoing collaboration between Clarion Call Capital and Adasina, specifically from an investment and an activist perspective.
That's a great question. Thank you, Danielle. And thank you, everyone who's joining us today. I'm really excited about this collaboration, particularly from an investment perspective, because as you all may know, Adasina is very strong in public equities, but particularly we do focus on the equity or the stock market. And we can't create portfolios that actually meet everyone's asset allocation needs without something as important as fixed income. And so when we look at our clients holistically and we look at their needs, our clients have been asking and kind of clamoring for more asset classes to be represented from a social justice perspective. And so I think from an investment perspective, this partnership with Clarion Call allows us to actually move into some other really requested asset classes. From an activist perspective, there's so much of the work that we do at Adasina that overlaps with the work that we do at the work that Eric does at Clarion Call. He mentioned really briefly the Investor Circle for Decarceration. That's something that Adasina has worked on for many years and really makes an impact on some of the communities that we're speaking of, particularly Black communities, which have, as we all know, much larger numbers of incarcerated individuals than by population in the United States. And don't get me started on the history of that because I will cry on camera. So I think there's a lot of overlap from an activist perspective. I think also one of the things that's so important about the work that we do at Adasina and that Eric does at Clarion Call is that we do look at things also from an overlapping lens. And so when Eric was speaking about lead line replacement, there are so many aspects of our work that a project like that touches. It is a climate and an environmental impact of removing toxins from the environment. It's a social justice and a racial justice impact in actually understanding what communities are going to be affected by the removal of lead. And interestingly, it's also an economic benefit because we know that lead actually lowers, lead poisoning lowers IQs. So there are so many overlaps and I'm just so excited about this strategy.
One thing I would add to that, Maya, if you don't mind me.
Please, please.
Yeah, please.
It's a great question. Please.
It's also the law of large numbers and its heft, and it's unfortunately, and I don't necessarily this is not the way I would like to see things operate in the world, but the hand that rules the cradle is the hand that rules the world on some level, and people associate that with finance and with more money comes more influence. And so when, with great responsibility, with great power comes great responsibility, the more collective assets under management that values-aligned folks have, the more influence that we can have as it relates to changing policy or to changing conditions at a grassroots level. And influencing the way capital markets work is part of that. So I think there's some heft when you create a system of the willing and values aligned folks.
Absolutely, Eric. I could not agree more. Thank you.
Thank you so much, Maya and Eric, for that. Let's see. Looks like we have a question here. Looks like this might be for maybe Rachel or Eric, we'll see. But since this strategy is happening through a separately managed account, the actual municipal bonds will be held, correct? Is it not being invested in a fund? I ask this because one of my clients is being affected a bit from the soon to be closing VNEC HIP Sustainable Muni ETF that is suddenly closing. So maybe you can share, maybe you can articulate how this strategy is different from other sustainable muni bond strategies. Maybe Rachel or and Eric want to take this one?
Yeah, I can start. I think, Danielle, I know why you're kind of kicking it to me. I've been doing a lot of speaking about this retrenchment in DEI and being very explicit about racial justice investing, kind of like what's happening in the broader landscape. And this question that came in, we are seeing situations like this sustainable muni fund closing. We've also seen a lot of funds, ETFs and mutual funds as well get bought out, or they transitioned ownership. They were BIPOC owned, and now it's transferred ownership to someone else, even if the fund is still in place. So we're seeing a lot of funds that were traditionally covering our racial justice needs go away. At this point, we're not offering a fund. You are correct. It's a separately managed account. And you are going to, it sounds like, have like a pro rata distribution. It's probably pretty messy from the closing of an ETF. But this is going to be a separately managed account, which some financial advisors find easier to work with. And so, Eric, I'd love for you to maybe talk about the point about this question about how the strategy is different from other sustainable muni bond strategies.
Sure. Well, one, just to echo your points, Rachel. So it is a separately managed account. So so basically, you own when you make an investment, you own that CUSIP. You can see it, you can hug it, you can pet it. It's yours. It's in your portfolio. And so that's just a reflection of just kind of where we are in our evolution around investing. I will say that we do have a $1 million minimum, and on some level, I need to apologize for that, in the sense that this is a strategy that focuses on low socioeconomic poor communities. In this particular case, African American communities. And it seems rather backwards that only those people who have, say, for example, $1 million to invest in a bond strategy are the only ones that can invest in low income neighborhoods. And so ultimately, it's very important to socialize and democratize the ability to make impact. And so at some point in time, we will have a sort of commingled vehicle, but right now it's in the SMA structure. As far as the what makes us different, to be honest with you, that generally speaking, we do a deep dive. This is a very, very labor intensive strategy where, again, we are. It is imperative that we be able to understand the use of proceeds for a particular financing and a theory of change and what a municipality is trying to accomplish, what they are centering, what they are uplifting. And so it is incredibly important to engage directly with them. And again, as I said earlier, generally speaking, if we don't have that, and let me say, we have an idiosyncratic inquiry for every investment that we make. And we expect to again be able to engage on that inquiry. If there is no engagement, then generally speaking, we will not make that that investment. And again, this is a pretty in-depth way of looking at the world. There are many days where I get the question, why are you asking us these questions? It doesn't seem to make any sense to us. When we think about K through 12 education, one of the things that's really important is diversity of faculty and teachers, because we know there's a body of literature that basically says as a student, if I can see someone that in the front of the classroom that looks like me, my outcomes and achievements will be higher. There is a horrific issue in many communities around the school to prison nexus. And so what are districts doing to, whether it be restorative justice, what have you, what are they doing to interrupt that nexus? So what is culturally congruent in a particular curriculum, and where are they meeting kids, and how are they meeting kids with that curriculum? These are all things that we ask about, that we investigate, and that absolutely makes a big difference in terms. No one else is doing that. I can say that pretty confidently. No one else is doing that depth of research and trying to understand a particular issue and how that issue can be addressed through financial markets. And again, we're using these sort of environmental, social, and governance frames to do two things: mitigate risk and to identify value. What I often say is that if you're not really addressing the environmental, social, and governance issues in a particular in your analysis, you're really not doing a full analysis, and you're leaving yourself open to various risks that aren't accounted for. So that's where I would leave that.
Thank you so much, Eric. Question here, maybe for Maya. What custodians will the SMA be available on?
That's a great question. So the strategy through Caring Call Capital, sub-advised by Adasina, is custodian agnostic. So we are able to reach all of the large platforms. The connections to that differ depending on what platform you have. So I highly encourage anyone who has that question to reach out to Eric directly. We're going to send our information on the next slide. But we are custodian agnostic, so we can probably work with you, and we'd be, as Eric says, on our train. So excited to do so. Thank you for that earworm, Eric. I'm not going to have that all day in my head.
Good one to have.
Thank you, Maya. Another question here, will there be an opportunity for a fund for individuals that can't meet the $1 million SMA minimum? Maybe Rachel, you can take that one.
Great. So you may be familiar with how we started with separately managed accounts with our public equity strategy, and then develop those into a fund. A general approach that we have is it really makes a lot of sense and has a lot of low overhead for us as an asset manager to begin gathering assets and really building a track record and a strategy out as an SMA. And if there are certain signals, looking at funds is something that is on the roadmap, because it's very important to us to democratize access here. The most important thing that you can do right now, if this isn't available to you from the SMA's perspective, is you'll see on the next slide after we're done with Q&A, please stay in touch with us. Join our mailing list. We send out emails every month to 2 months or so to give you the latest updates on what we're offering and what's happening in the world of social justice investing. So please do stay in touch with us and find ways, whether it's through your own portfolio or if you have the ability to make efforts inside of other portfolios. If you're on a board of directors, on an investment committee, or you have access to other larger portfolios, the more assets that we can get in the SMA, the more likely we are to see those indicators that allow us to push forward with a lot more labor and resource intensive process of creating funds.
Thank you, Rachel. Look, a question here maybe for Eric. Eric, what, if any, additional risk, perhaps credit or liquidity, do you take on to make the value aligned investments that you do? And then how do you mitigate that risk?
Yeah, I mean, it's the research. It's our score. We assign scores to each aspect of environmental social governance. About 70% of the overall $4 to $5 trillion market is rated AA or higher, AA minus or higher, and so cumulative default rates are incredibly low. In fact, the 10-year cumulative default rate for an A-rated muni is 0.1%. So the municipal market is just a perfect place for impact, but for consistent high quality income, lower risk, generally speaking, lower risk overall. So yeah, that is a very important aspect of the sector as a whole. And by the way, it's also there to offset it's basically there to offset your equity volatility and the volatility that you have in other aspects of your portfolio, like your alternatives, private equity, private debt, et cetera, et cetera. So it is an anchor in your portfolio, and it's there to serve that as sort of also historically low correlations to those other markets. Yeah, and in terms of research, again, we just kind of use the frames, our environmental social governance frames, to try to better understand localities and to really understand the risk that we're taking. And when we approve a credit, we approve accordingly. What we say, if there's a AAA rated credit, which is the highest rating, we have a certain exposure target for that. If it's a much lower rated credit, meaning BBB or even below investment grade, because there's so much impact to be had in smaller organizations that are below investment grade. Obviously, we take a much smaller position, again, using all the traditional portfolio management techniques that anyone else would use, but we're just applying it through a frame of impact, and impact specifically with this strategy in African American communities.
Absolutely. Can I add a little bit to that, Eric, also, and bring back a thread that I think is really important? One of the things that I know that we do in the strategy that I think is so important to highlight is that we are in conversations with the issuers. And it's so rare that actual purchasers of bonds are in as deep conversation as we are, because we need to have so much information about the source of funds, and what these municipal bonds are going to actually be what they're going to be funding and the impact they're going to be making in the community. And so that does several things for us. It really increases our ability to make impact. And I also believe that it lowers a lot of that risk, because really and truly understanding the communities that we are investing in allows us to get a lot of information, analogous to some of the social justice information we get from our social justice partners at Adasina, that allows us to make great impact and also make great investment choices.
Thank you, Eric and Maya. We have another question here. It says, I have an investment manager and I'm a little fish in a big pond. If I want them to look at Adasina, Clarion Call Capital, do you have suggestions for how to encourage them to do that or push for that? You might want to take that.
Yeah, I can take that one. Adasina and I specifically are one of the co-creators of the Due Diligence 2.0 commitment, which we'll be putting in the chat. That's a series of actions that asset allocators, and asset allocators are anyone who's choosing where to invest, that asset allocators can take to remove systemic bias from the process of choosing asset managers. Adasina is an asset manager. We are a Black owned and led asset manager. Clarion calls a newer registered investment advisor. Both of those can present some headwinds that the principles of the Due Diligence 2.0 commitment can help that allocator overcome. It's a kind of a good place to start with them. The other thing that I would say to you is, if you have an investment policy statement with your investment manager, talk to them specifically about updating it. And the way that you want to update it is to try to achieve a measure of fairness. And by fairness, you could measure that as demographic parity, like how many women and gender expansive folks are managing portfolios in the general population, and compare that to what's in your portfolio. And you can have one way you assess your investment manager about how much they're moving toward what we call parity with the demographics in the country. What you will probably see on first notice, if you put that in your investment policy statement, is that you'll almost certainly notice that the investments are going to be over almost certainly 90% by firms and portfolio managers that are white men, because that's kind of the demographic tilt that is inequitable in our industry right now. So those are two specific examples: the Due Diligence 2.0 commitment, which I'll ask our tech person to put directly in the chat for everyone, and also updating that investment policy statement to start to approach demographic fairness, right? So because if women and gender expansive folks are half the population, but we're less than 5% of all asset managers, that's something that no matter where you are on the political or even financial spectrum, you can start to look at, and the portfolio is a movement toward equity and inclusion. Also, there are plenty of studies that show that diverse investment managers also have some outstanding outperformance.
Great. Thank you so much, Rachel. Thank you, everyone. That is all the time we have today for Q&A. Want to again invite you to connect with us here at Adasina. We welcome the opportunity to get to know you a bit more, learn about the work that you're doing, share information on our products, our social justice work. So please don't hesitate to reach out. And then thank you again to our speakers, Rachel, Maya, and Eric, and really each of you, everyone who joined us today for this very meaningful conversation. As we've explored, this strategy is about much more than investing. It is about intentionally directing resources to repair systemic harm, support thriving communities, and quite frankly, shift how capital operates in service of justice. We will be sending out a recording of today's session for you to revisit and share with your networks. If you have any additional questions, or if you're interested in investing in this strategy, we encourage you to reach out to Clarion Call Capital directly. You can reach out to Eric. His information is on the screen there. And again, we'll be following up with full contact information as well. Just as a reminder, this strategy has a $1 million investment minimum per account. Clarion Call Capital is the investment advisor, and Adasina Social Capital is the sub-advisor. Thank you again for your time, your curiosity, and your commitment to aligning finance with justice. We look forward to continuing this journey together. Thank you.